All right, guys. So, going to quickly talk about setups. Okay, setup. So the last time out, we spoke about the standard operating procedure. Okay, and then the standard operating procedure is such that it's a step-by-step rule of what can guide you into taking a trade from the daily and the H4, including the H1. The idea is, I've already been saying the idea. All right. You must therefore know how to validate SNR levels. Okay, you can't wait for price to get to an H4 level before you decide to take a trade, or get to some levels before you decide to take a trade. If price is on an M30 level, right? As long as that M30 level is valid, you must be able to take trades from that level. That's why we are having this this lecture or this class. Okay, so I'll show you an example now. This is gold's chart currently, and we have this level right here, right? This is breakout scenario. First came. This is our first initial attempt. Now, do I need any other thing? What else do I need to confirm this level? Okay, one, I have a miss. So one of the most important videos for this bootcamp is those SNR validation videos. I think there are about two of them. All right. The more you watch those videos, the more you can open your eyes to these things. Okay. So on H1, do we have an MTF? The price tap the MTF. Yes, price tap H1 MTF. Okay. So that gives you more confidence to be able to trade from this level. Okay. So you could have taken this sell right from here. All right. So say you missed the sell from this point. So where would you like to continue? Okay. So considering the H1 MTF, so we'll look for M15 engulfing, M15 breakout, M15 engulfing, whichever one comes first. So if you get M15 breakouts, it's good. If you get M15 engulfing, it's very good. Okay, so when price tapped, our first engulfing that formed was this guy here. Okay. That was our first engulfing that formed. And then we see price come tap the classic SNL level on the M15, blah blah blah, dropped, still over around the zone, and then continued to drop. And so today's price action is so interesting that if you've been following everything I've been teaching, it should be an easy thing for you, right? It should be super easy. Okay. So again, we had breakouts, and breakouts here. So the retracement is further confirmed. All right. So this would have been a good entry just up above the engulfing, and then price dropped pretty well. So for continuation setups, why are you concerned about continuations? Because if you sold from those points, at the time, you would expect this is where price was, right? You would expect that price would come back to this particular daily SNL level, okay? Because daily would always go to daily, right? Or H4 would always go to H4, okay? H1 would go to H1. So price just tapped a level, the closest intraday level that price would probably seek is this SNR level that is closest to us, okay? So if I'm going to start selling from here, one of the firmest places I want to watch out for is this area. So what I will do is whenever I'm taking my continuation setup, as long as price has not gotten to this area, right? I'm going to keep looking. Okay, I'm going to keep looking. So let's see. When we started to drop, did we get MSUs for continuation? Right. So let's see if we got any MSU. So we have an MSU here. Right, you guys can see it's took the low, right? And then took the high, took the low, took the high. Okay, the move primarily into this area, right? We end up moving to that area. On this zone, we could not really tell where price was reacting from. So finally, we got a move into this area To confirm this area, we got an M5 engulfing formed. Okay, it's right here. Okay, engulfing. So after this M5 engulfing, you can put your after the engulfing forms, you can enter the trade directly. Right after this engulfing forms, and this next candle is opening, enter the trade directly. And enter the trade directly, and then you put your stop above this level. Okay. So you put your stop above this level, enter the trade directly. What will be your target? If you're targeting 20 pips, 30 pips, it's good. Remember this daily level now becomes our target, right? So I drew this level from the daily. I'll show you guys again. So someone told me I just say daily level. So yeah, this is the level, okay? So when price got to this level, we're not just looking at just this level to make a decision if price is going to keep selling or not, right? There are other things to factor in, okay? So we have this level, this is a daily level, the closest SNR level on H4 to that level is this gap level, right? Okay, so you see how MTF works, right? So this is the closest, this daily level, that's the closest H4 level to this level. Okay, so and then price sold and got to the zone. And you see what happened when we tapped the zone, we had a retracement, okay? We had a over 100 pips retracement. So let's see, let's see if we get an H1 MTF in this area. Okay. So price comes and then we see the stop into this area. So that validates that this is an H1 level. So from H1, I would like to go to M15. And on the M15, I got my engulfing, right? The M15, I have M15 engulfing form. Immediately the M15 engulfing form, this candle will be traced into my area. So that's my entry, right? Entry on that level, my stop on this level. Where would I take the trade to? So I'll go back to the H1. Where is my closest H1 resistance? Invalidly, if you guys have been following, you know that one of the places I would love to continue to sell from is this engulfing field, okay? Or engulfing setup. This is an engulfing gulf field. Now it's an engulfing cell, right? So this was the initial engulfing, these two candle. When you combine this one, this becomes the new engulfing. So if I'm going to buy, I should buy back to this level. That's some decent 80 pips, right? So on this level, price comes and tabs. Let's see the H4 again. So remember what I said, always check the H4 chart, guys. See, never trade this way without looking at the H4 after every 4 hours. When a new H4 candle forms, check the H4, mark those new SNR levels. Okay, because when you look at these levels, right, on the H4, price tabbed this one, so price tabbed. Interesting levels. Okay, so within our H1 engulfing field setup, all right, we have our H4 level, so that becomes our area of interest. So on the H4, this H4 gap area of interest, and it is notched into our H1 AFG setup. Okay, so how would I enter the cell here? All right, the cell was very interesting. It was super sharp, super sharp. Okay, it was super sharp, like I said. Okay, so from H1, go to M15, right? On M15, did we get an engulfing? Yes, we got this engulfing. Okay, so this engulfing, where is your entry? This is my entry, my cell, my stop above the engulfing, and I just write it. I just write it, whichever way I want to write it. Now to validate this level, okay, maybe I'm too scared to enter 2 time frames below M15 is M1. I usually don't like going to M1. In fact, I advise traders, especially if you're a new trader, to stay off M1. But I'll show you guys the magic now. What time frame did I come from? I just exited M15. Okay, M15, two time frame below M15 is M1. Now see your M15 area. The M15 area, we have an M5 engulfing field, engulfing setup, right? So why I'm doing this is because I want you guys to see that you can actually reduce the stop loss on this level. So by marking this engulfing field, engulfing area, okay, by marking that engulfing field, engulfing area, we further increasing our profits and then reducing our risk. Okay. So another thing I want you to note is that this is actually an MSU setup. Okay, so price takes the low right here is a candle MSU. Okay, takes the low right there and then takes the high. Takes the low, takes the high, and that into an M5 gap before the sale continues. All right, so we have further validation that we can take this straight from here. Okay, so back to the M1, I wanted to show you guys. So on the M1, I want you guys to still follow through. What do we have here? This is an engulfing, right? This is an engulfing by engulfing field, right? This is an EFG setup, okay? So it means that this level to this level now becomes my area of interest. Sorry, I didn't draw the week. This level to this level now becomes my area of interest. So I've reduced my stop. So I can have 12 pip stop, and what will be my targets? Back to the M15 where we're coming from, right? So see, it's so interesting, right? 12 pip stop, target this SNR level. Why am I targeting this SNR level? Remember, this SNR level is a strong level. Why is it a strong level? Because it's a strong level means price will not just suddenly break it. Do you get? Price may eventually continue to sell, but this guy is a strong level. Price cannot suddenly break it. Why is it a strong level? Remember, I explained this guy took liquidity, right? And then he had a breakout. That's one of the ways I said you can validate an MSR level. Took liquidity, had a breakout. So if I'm going to take my target for sales, I'm exiting here. I'm going to be exiting at this level. If you check the M30, see still like M30 SNR MTF, check each one, it's probably going to be around the same level. Okay, you see that. So, and in fact, it is an engulfing, this is an EFG setup, okay? It's an EFG setup. So when price comes on the M15, I also want to buy. Right? You see how the market works. This is my logic when I come to the market. That's why you see me, I enter this trade and on the other side again, because I'm consistently thinking about valid SNR levels to trade from. I typically don't care about storyline. I don't care about daily must go to daily, weekly must go to weekly, and all of those things. Okay. They happen, they do happen. But what makes those things happen are these smaller time frames. So if you don't know how to validate SNL levels on M15, M30, H1, H4, you're going to be lost pretty much most of the time because the market does not just go up and up or down and down. The market ranges for most of the time. Okay, ranges for most of the time. So price taps the level. Okay. Do we have a miss? We have misses. This is our miss here. Right? First initial attempt to take that pricing level. So this is an M30 SNR around this area, then M15 MTF. Going by my logic, I can go to the M1 from M15 to time frame below, right? And we find engulfing to form. Okay, so did I get my engulfing? Yes, I got my engulfing. Was I able to get a trade from it? No, there's no trade. So I just keep looking, right? Just keep looking back 25. Just keep looking typically. So on the M5, finally got M5 engulfing, able to enter, right? M5 give us a solid engulfing. And then we had this retracement. So we could have entered on the HNS to this level, because price did not come back to the extreme. Okay. Enter on the HNS and validate the HNS on H1. So if you have an engulfing on that level, you're also good to go. So you have this engulfing form. So you could enter immediately after the engulfing forms, put your stop lower and the stop below this also. And then how many pips? You still get to send 36 pips even after the market has it's almost closing. Okay, so that's the general idea, especially for today's price action. All right, so I want to elaborate on these setups. All right. So I spoke about you guys already probably know the MSU setups. You just need to master it. Okay. Now the engulfing fill engulfing setup is what I need you guys to master now. Master very well. All right, so the engulfing fill engulfing setup can be in two types. Okay, can be a three candle pattern or an extended pattern. The three candle pattern is what I've been showing you guys for most of the time. For sell scenario, so sell scenario, you have something like an engulfing buy, okay, then engulfing buy, now engulfed by the bearish candle. Okay. So this is an engulfing, right? This this is the three candle setup. Yeah, right? This is the three candle setup. Okay, this is for sell scenario. For buy scenario, I said there is a three candle and then there is the extended type. So buy scenario, you have an engulfing sell that is now engulfed itself. Okay, so what would happen for sell scenario? Price would come, tap, drop. Okay, for buy scenario, price would come, tap, and drop. And there can also be breakouts. Okay, so there are times price can break out. So we can have breakouts. So when there's a breakout, price would continue, tap, and go higher. Okay, for this, if there's a breakout, price would come, tap, and then go lower. All right. So that's why if you're in the sell from and anything I mentioned from most of these classes for continuation setups, they are usually immediate. I would say that again. They are usually immediate. Continuation setups are very immediate. So you have to pay attention to the immediate retracement. Okay. The immediate retracement. That's what you want to benefit from. All right. For the extended setup is something very popular, right? For the extended setup, you can have an engulfing for sell scenario, right? You can have an engulfing buy right here. And then after the engulfing buy, price is just going to go blah, 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 and break. Okay. When price breaks, an engulfing sell would form here. I'll show you guys examples, don't worry. So this is our engulfing fill, engulfing pattern. Okay. So price would come, tap, 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 sell. This is the extended type. This is the three candle type. Okay. This is the extended type. Sorry, this is the extended type. This is the three candle type. For buy scenario, you have a bearish candle. And remember, I said they are continuation setups, guys. Don't forget that, please, please, please. So you have bearish candle, and then fails. The engulfing fails. So you have blah, 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 blah. Price comes this, yeah, okay. Let's have something like this. So that's engulfing fill. Then yeah, we have something like this: engulfing fill and engulfing setup. So your expectation is that price would come, tap, and then go. Okay. These are continuation setups. So you look for them on 3 time frames. Okay. Continuation setup on M5, M5, M15, and M30. Continuation setups M5, M15, M30. What do I mean continuation setups? Now, if price is going from H4 to H4, when it leaves an H4 resistance, any EFG setup you see on M30, M15, and M5, they are going to be used to continue price to the next H4 support. Storyline says H4 resistance to H4 support, right? So when you leave an H4 resistance, our price starts to drop and keeps forming M15 EFG or M30 EFG or M5 EFG. You would notice that this EFG is the same thing as MSU, right? The same thing as MSU. Okay, but maybe not today. Maybe you guys should go and study that better. Okay, so you would see that price left an H4 resistance, start to sell. The target is the next H4 support, right? For the story to be complete. So whatever we now get on M5, M15, M30, EFG, that area or those levels would serve as our continuation areas. Okay. The reason for this, I keep saying it, continuation setups are the best. We are going to see continuation setups later, talk about why they are the best. Okay. These are still the same setups. We'll just talk about why they are the best. All right. So you have your EFG, 3 candle setups, and the extended type. So I explained the 3 candle setups in the last video. So you guys should probably watch that from the last class. Now let's see the extended type. Okay. Let's see the extended type. Looking for a way to not delete all this, but still delete. Okay. All right. So M30. M30. Extended type, right? I want you guys to follow through. M30 extended type. So we started selling from H4 around here, right? So M30 extended type is this level, okay? This level. Price will not definitely come back to this level, right? The price is literally going to use the engulfing, but it's just important. This level is more for precision, okay? So you have your engulfing, right? That failed. And after failing this field, we have a new engulfing form right here, right? And 1, 2 broke out, right? So new engulfing. This is the extended type. Okay. Another example. Note it's for continuation setup. Continuation setup. Okay. I'll show you guys another example. See. See. Okay. See another example where it's actually not very clear. But let me see. I think I can still show you this. So yeah, let's see. This, let me show you guys this one. Let's see a better example. All right. Continuation setups. Mm, I think what I should have done is I should have marked them, made a screenshot so that when I come to the chat, I won't be looking for them like this. Okay. So we have this example. It's not the best example, but you have to manage it. All right. So we have this. Oh, this not even engulfing film. let's say this is an engulfing field, but this is not an engulfing field. But this is a perfect engulfing, right? So price tapped, and then went up. But this is not an engulfing field. But I don't know, this would still count for our setup, right? So just continuation. Let's see. We get anyone there. So here you have your engulfing field. Price comes and then start to sell. Okay. Oh, there should be one here on the lower time frame. Let's go to M15. Okay. All right. So you see that we have an engulfing buy. Let's go to M5. I don't want us to start stretching, having to feel our eyes before we see it. Okay. Sometimes they can be very, very clear, so we don't have to force it. So this is an engulfing buy, right? Field. After a field, an engulfing cell formed. Okay, so EFG setup. Okay. You see that for this scenario, price came back to this particular level. Tapped and start to sell. All right. M5 is usually best really. But sometimes what you get on the M30 is very much valid than what you get on the M5, right? So another example here, M5 example. So you see price from an engulfing field, right? After a field, we have this engulfing form. This an engulfing price comes in, taps, start to sell. Okay. All right. Let's see more and more and more. Continuation setups only. Okay. Delete tab. Continuation setups. Continuation setups. All right. Hope you guys can see this. So we have engulfing field, right? Engulfing, right? That's by continuation setup. See, the buy already started from here. Okay, we have an engulfing field, we have an engulfing form around that level. Taps and then starts by. Okay, so that's how it works typically. And then when you look at the sell scenario is the three candle EFG, right? So this is an engulfing field, three candle EFG. Okay, the price comes, taps, sells to this level. See how easy this is, right? So we have the extended and then three candle type. Okay. Let's see more examples. The examples here, if you guys can find it, continuation setups, guys. They're literally the best. All right. And you see this one. Now see this. This is an engulfing field, right? And then you have this engulfing, right? As long as it forms on the next engulfing, it's valid. Okay. So is where price will use that you might not be sure of. So you have to refine that one yourself. But in this scenario, you see price comes, tap this level, tap and go. More interestingly, this gap level, right? Okay. So that's continuation setup. So I think this is a good example. So assignment for you guys. I'll drop the assignment on the assignment page. Okay. So the next thing we'll talk about is time and price theory. In the forex markets, as you are aware, that there are different sections. We have the Asian section, which in my country currently we're in the Asian session. Okay, there's the Asian section, the Sydney, Frankfurt, the London, and the New York section. Now, the session that has the highest volatility for gold is the New York session. The highest volatility by all mile. Okay, is the New York section. In my country, right, the time for New York session is going to be different for the time in your country. but there are specific times where you expect huge momentum. Why? Because at those times, the foreign exchange basis or the foreign exchange market opens at those particular hour in those countries. For example, the London Q zone, what we mostly called London Q zone. The opening range for the London Q zone usually between 7 a.m., 7:30 a.m. GMT, not GMT plus one, GMT. Okay, 7:30 a.m. GMT to 9:30 a.m. GMT. Okay, that's where the opening, that's the opening range. Okay, and that's where you expect that it's going to be an huge injection of liquidity. All right, so there is let me see. Hold on, guys. Let me see if I can share my Telegram. Hey, sorry guys. I want to show you to the origin, the man that invented the Q zones, right? So hold on. I'm trying to share my screen. So the idea of the Q zone, I can't say was invented, but the idea of the Q zone was propagated by ICT, the Inner Circle Trader. Okay, so when you go to ICT's website, which is where I'm currently on, all right. I don't trade ICT methods, right? The only important thing about ICT method is the Q zone right now. Now, so these are the Q zones, okay? Because I could as well as have copied this image. I'll probably copy it and send it to you guys in the chat. Okay, so the idea of the Q zone is that you expect momentum, you expect price to behave in a certain way, right? Now, in my trading career, I'd encountered what is called the Asian range, trading the Asian range. And what I noticed is that the Asian range, the idea around the Asian range is not objective. Okay. Price does not always read the Asia low, read the Asia high, form a Judah swing, and all of those things. The man, they happen, but they don't always happen. Okay. Which is another reason why many people don't trade ICT anymore. But what we are focusing on right now is the idea of the Q zone. Now, the Q zone in the London open Q zone happens between 8 a.m. to 9 a.m. Something is wrong somewhere. Sorry, this should be a.m. This is not p.m. This should be a.m. So the London open Q zone happens between 1 a.m. to 4 a.m. EST, Eastern Standard Time. All right. 1 a.m. to 4 a.m. EST. So you have to convert that to your time zone to get the idea. I don't use indicators for Q zones. I have the time in my head, right? I know that in my country, when it's 8 a.m., I'm expecting volatility between 8 a.m. to 10 a.m. That's London in my country. Okay. I know from 1:30 to around 3:30 p.m. That's the New York Q zone in my country. So I don't use any indicator for them. All right. I don't use indicator for them. And I know that between 8 p.m. or sorry, between 4 p.m. and 6 p.m. That's my own London closing Q zone. Okay. There are indicators for this. If you search trading view for Q zone indicators, all of those things, the time would come out for you clearly, and you're able to see that there's usually an injection of volatility in the markets. Now, why am I mentioning Q zones? You see, Q zones are particularly important, especially when you see an MSU formed inside a particular Q zone. So when an MSU forms in a particular Q zone, it's or forms before the Q zone, right? So two things. If an MSU forms before the Q zone, expect that inside the Q zone, price is going to retrace to that MSU and go in a good direction. All right. If an MSU forms within a Q zone, expect price to probably not retrace. It's going to keep flying, keep flying, keep flying because there's a lot of injection, right? So you have to wait till later to be able to enter the trade. Okay. But the idea is to ensure that you are trading around kill zones so that you're not trading when the market is ranging. The easiest time to lose money is when the market is ranging. And this is worse, especially if you're trading M1, M5. It's so worse. And that's when we start to talk about framing setups, I will explain it much better to you guys. But one of my biggest losses, guys, my biggest losses have come from not trading in Q zones. They've come from trading small ranges, right? Trading small ranges, ranges that market is just open. Let me give you an example. Let me give you an example. Usually on M5 that these things happen. Okay, yeah, this is an example. Now, tell me, what is the meaning of this? What is going on right here, guys? Okay, what is going on right here? In the past, I would have lost a lot of money trying to trade this area because I'm like, oh God, I'm just frustrated. What's going on? And those are the areas traders lose a lot of money. This area, see, what's this? And this is going to go on. Now, this is for how long? From 9:35, like an hour. You're just entering the trade and you're eating stop loss entrance. See this area. Goodness. What is this, guy? What is this? So if you're not very careful, okay, if you're not very careful, you're going to be taking a lot of losses. So, and one thing you should remember is that after any of these ranges, markets would always move at least 100 pips. After any of these ranges, range, you just see crazy move, boom, 100 pips. Okay, crazy move, 100 pips. Is that not interesting? That's one of the funniest things we ever seen in trading. When you see crazy moves and just see 100 pips, right? And market has been ranging all the while. So time and price theory, I'm going to, I would have loved to expound on that, but this is a very basic course, okay? But the idea is to always remember that what moves the market is injection of volatility. At those periods, that those periods are where they are the highest, right? Volatility is very high. My country is currently a session. See, so slow, right? So slow. So it's New York. How many pips? So New York, my country, over 200 pips. This was London. The sale was London, over 130 pips. So soft. And oh, I forgot to mention to you guys, this was a very good trade though. I'm not sure if anybody took it. This is an MSU, right? MSU into an engulfing. See that? I don't know if you don't think this works. I don't know what works. Okay, easy, right? No hard, not complicated. So that's why I'm not expanding a lot on time and price. All right. Just want you guys to be able to follow the simple things and make money. So now let's talk about the other types of setups. So where is my setup guy? Okay. So we talked about the EFG setup. So we talked about the three candle and then the three candle setup and the extended type. I explained the extended type already. Now, the second type of setup we want to talk about, which is favorite setup, is right. You have breakout, you have pullback, and okay, breakout, pullback, entry. This is the gold standard of trading in Malaysian SNR. You have breakout, you have pullback, you have entry. Let this be your anthem. Okay. All right. Another type of setup is similar to the EFG setup. So you have something like this. Okay. But in this scenario, you have an engulfing, a new engulfing form. But this candle, the buy candle is just so huge. So whenever you see a huge candle break, a huge candle cause a breakout, price is likely going to do something like a pullback entry. So this is an example of this breakout, huge candle breakouts, right? It could be a singular candle, huge candle breakout, retrace entry. Okay. Price might not break this high, but yeah, you get my point. You're still going to get decent pips from taking the trade here. Okay. Why? There's a huge candle breakout. So when you have a huge candle breakout, we have each candle breakout, decent entry. Okay, decent entry. All right. I think one of the last stories I would have loved to talk about is second movement. But the idea of the second movement, I don't want to complicate things for you guys. Okay. The idea of the second movement for me revolves around liquidity concepts. So I already liquidity concepts and mitigations. Okay. So I explained to you guys before that if price does not touch at least 50% of an area, we cannot say that that area has been mitigated. For example, this engulfing, sorry, this engulfing has not been properly mitigated, while price had not encroached at least 50% of the engulfing. So 50% is still somewhere here. Okay, so it means that price can still come tomorrow and probably tap here and sell. All right. Why? Because mitigation. Mitigation is very, very important. So when price mitigates at least 50%, that's when we say that we have second movement, especially at the bottom. And that second movement, okay, sorry guys, let me do this, guys. And that second movement is the likeliest area price is going to use rather than using the exchange. Why? Because it has mitigated the other guy. I'll show you an example. Let me show you an example because it's like I'm just seeing gibberish. Now, see this. This is the first engulfing that formed after we tapped the SMR level, right? This is the first engulfing. Now, the price mitigates 50% of this engulfing. Let's see. Yes, this guy mitigated more than 50%. All right. So this is my second movement. Guys, that's my second movement. Mitigated more than 50%. If you draw, you see a lot of stuff happened on that level. So that's my second movement. Okay. Let me see another example for you guys. This is a good example. This is an MSU trade. This is my second movement. So that's the idea for second movement. If when I take a more advanced class, I can explain that better. Well, I don't really think you guys need it as much. Okay. The same thing here, right? For this scenario, tap, did we tap up to 50%? Yes, we did. So where would price use? Price will use this guy. We're going to use it there. So this is your second movement. Okay. So the idea of mitigation is how I believe second movement works. Okay. Notice the word I believe. This trading industry. All right. So this guy tapped. Probably have to go lower to find the engulfing in that area to know if it's probably mitigated. Okay. So this is the engulfing. So you mitigated completely, right? Mitigated more than 50%. So this is my second movement. You see price taps and then start to drop. That's the idea of second movement. And then it came back again. Why did he come back again? I'll tell you. Came back again because this guy did not mitigate up to 50%, right? He didn't mitigate up to 50%, no. But when he came back, did. So this guy just tapped and sold. But this one came, mitigated up to 50% and started to sell. Now, I usually you never see me bring out this stuff on my chart. Why? Because I can use my eyes. I can estimate with my eyes. I can know if, oh, okay, this has mitigated properly. So I can easily identify the second movement, especially with my eyes. Now, if you look at this area, okay, because second movement is the reason why price will not use a classic SNR. So you see this level, price taps the 50%. When it comes back to that level, what happens? Taps and then buys. Okay, taps and buys. So a lot of reason to even buy from this area. It took liquidity. After taking liquidity, you had breakouts. So that's a valid SNR level. Okay, and then you had miss. These are your misses, mr misses. So price comes, taps. Imagine on the M5, yeah. Imagine just framing a trade on the M5. Why are you taking this continuation setup? Because this reaction is probably from H1 H4, right? So buy from here. How many pips did this have given you if you took the trade? Descent 50 pips, right? Okay, so that's the idea of second movement. So um I think we've been able to cover pretty much everything about setups and time and price theory. Don't forget that the sections are important. Okay, the sessions are important. All right. So before on Friday or on Thursday, I'm going to drop a video on trendline kiss. It's going to be one of the best videos. I I rarely use trend lines, but when I do, it's deadly, bro. When I do use trend lines, it's super, super deadly. All right, so I'm going to teach you guys how to use trend lines, what time frames to use your trend line on, and how to look for a kiss. All right, guys. I think this is going to end there, and do have a wonderful, wonderful day.